Hi, I'm Wes Moore. Welcome to Moore TV. You know, there's not a week that goes by that past clients of mine or referrals don't call me and say, Wes, should I refinance? Well, today in this short video, we're going to explore some answers to that question. There are basically only two types of refinances, a cash-out refinance and a rate and term refinance. A cash-out refinance enables the consumer to access the equity in their home and get a check at closing to do with what they want. It could be for college tuition, a vehicle, a trip around the world, or simply to pay off high interest rate credit cards. The reason most people do this is because mortgage interest is deductible, while most other interest is not. Now talk with your CPA to check your particular situation. A rate and term refinance is simply to change the interest rate or the term on your loan, thereby either lowering your monthly payment or lowering or raising your term. A rate and term refinance is a fairly simple, straightforward mathematical calculation to check the benefits. We'll simply take the new interest savings and divide it into the cost to refinance to see how long you have to own the home or the loan to reach your break-even point of paying off the cost to refinance with the monthly savings. Let's take a look at an example. Assume you have a $200,000 loan with 25 years left at 6% interest. You have heard that rates are down to 4% and you call me about refinancing. I would suggest a new 25-year loan at 4% interest. That's a 2% per year interest savings, which on $200,000 equals $4,000 a year. If it costs you, let's say, $6,000 to do the refinance, which you probably won't, but let's just use that, then you have paid for it in 18 months. Plus, you've shaved a year off of that 26-year mortgage because you got a new 25-year. That's pretty much a no-brainer. Another example might be a refinance to have your home paid for by the time you retire in 15 years. Let's say you're 40 years old. You currently have a 5.75% rate with 24 years left on your loan of $200,000. I would suggest a new 15-year loan at 3.75%. Your payment might increase slightly, but you'll save $4,000 a year in interest again, and your loan will be paid off in that 15 years when you retire at age 65. That again seems to be a no-brainer. A third example. Let's say you just bought a house a year ago. You have a 5% rate with 29 years left, and rates are down to 4%, with $4,000 in closing costs, and you owe the same $200,000 as the other people. Well, you would save $4,000 per year, and you pay for it in a year because it costs you $4,000 to do it, and you save $4,000 a year. Once again, that's pretty much a no-brainer. The old rule of having to save 2% is really gone. The new rule is A, how long am I going to be in this home? And B, how much does it cost me to do it? We simply run the numbers, and if it makes sense, it makes sense. Cash out refis are a little different. You simply look at the reason for the cash out. Buy a new truck and have the interest deductible, that's easy. Take a trip around the world and have the interest deductible, that's easy. Pay off those high rate credit cards and have the interest deductible with a new interest rate of 4%, that's easy. Now most people can pay for their costs of refinancing in 1, 2, or 3 years or less. And most people that refinance plan on being in their home at least 3 years. That's pretty much the bottom line. So if you have a question about refinancing a home in Albuquerque or anywhere in New Mexico for that matter, give me a call today at 505-249-4506, and let's talk about your particular situation. I'll give you the straight facts and let you make the decision. Please be sure and share this information with your friends on Facebook or email it to them or forward it on to whoever you think might benefit from this. Be sure and subscribe down here to my blog if you want to get this information on a fresh basis. And until next time, I'm Wes Moore.